So hello and welcome to the Fat Trader. First things first is to say that this is information only, does not constitute financial advice. So the usual thing, looking for a sponsor, please subscribe to this channel and leave a comment as liking video. So today, looking at ETFs. So I've got one called IPO, Renaissance IPO. So what it does is it invests in IPOs, as the name would suggest. So it's got some of the good names which have done very well, and it also got some names that over time haven't done so well. So this is probably a way to get a basket of IPOs, and over time, looking back at the charts, they've done fairly well. So looking at the relevant distribution of them, most of them are in the technology as well as the healthcare. So coming in later is consumer discretionaries, and then just diminishing. So it invested in the big weighted market cap and small amount in the mid cap. Overall, it's been trading at a very small discount, which is good. So let's go back to the share price. I'll put it on max. We've gone back to 2014. It's sort of done reasonably well. And I think because a lot of the IPOs have been related to sort of working at home, it's done pretty well. Today I'm recording when the Nasdaq hasn't done so well, and that's reflected in that. But the bar chart is showing that this is a strong buy. Having a look at its depth, I mean, it is at the top of its window, but over 52 weeks, it's done a stellar return. And over 1 month, it's got a reasonable return. And with this, it also tells you a little bit more about what the fund does, provide investors with efficient exposure to portfolios of US-listed newly public companies ahead of their inclusion in core equity portfolios. The interesting thing about bar chart is it will also load the constituents if it can. But going back, it also gives you potential entry points. Now, with this fund, it is pretty good, but I would potentially keep a note of the relevant IPOs. Probably put some money in probably a month after an IPO actually comes to fruition, because what normally happens is that all of the excitement evaporates after a month, and the price meanders back down to a reasonable entry point, and it means that you are investing in one particular fund which has all of the good stocks, and you have a reasonable sort of ETFs are usually fairly cheap. I mean, there's very little dividend to talk about, but for this particular fund, it is quite high at 0.6, but for what you potentially can actually return, it is a good thing to invest in. Albeit, it's probably one where you sort of build it up rather than put in a lump sum and let it ride, build it up sort of quarterly. The company behind it is a company called Renaissance IPO, the IPO expert. So, of course, they have their prospectus if you want to look at it, but because they have the eyes and ears to actually have a situation where they can actually be available to actually snag these IPOs where you may not get what you want. A lot of these have done pretty well, and taking into account their chart, which goes back a bit further. I mean, it started out at this level. It's slowly come up. It's had issues here, but this is a very good angle. And here it's just gone ballistic. So in this time, you've got a six-fold. So that's this time, 5 years, you've got 150%, probably made up with the majority being the last chart. Unfortunately, you've got sort of this sideways trajectory. So they're comparing this fund against the Standard & Poor's 500. So they're saying, you know, special times, they're getting 69% year to date, you know, which is effectively even more, 90 for a year, where the S&P is getting 15 and 6 respectively. Over 3 years, you know, it's removing a lot of the froth. You're getting 26% over that particular time. So that's annualized. And since inception annualized, that's a pretty good return. It's sort of 3 points over Standard & Poor's. So obviously it comes with its risks. It's got a ticker of IPO, and at the moment the spread is fairly tight, and you know it's got a pretty reasonable hefty number, you know, volume traded, and I think it's probably one of the stocks to, well, one of the ETFs to have in your list, which you just park away when you've got a spare bit of money. Probably put sort of £500, $500 in, and just have it as a bag holder, because effectively, you know, the risk is taken away because of the number of stocks. Their idea that they can actually get the ETFs at the market on day one, where a lot of people have to trade sort of second, third, fourth day when their sort of broker gets lined up. So thank you very much for your time here. Please let me know if you want to sponsor my channel or you want to sponsor a particular video. Subscribe to my channel and like this video, so I know that somebody is watching this and they are interested in my videos. Thank you very much. And this is the Fat Trader. I will see you on the next video. Thank you very much for your time. Goodbye.